Congrats to all of the Bitcoin investors out there who have held. This chart here is showing Bitcoin essentially since it really became a chartable, tradable asset, which I think the data from the exchanges really goes back to about 2011. That's when you can really first start to see its price, first the dollar, in sort of this charting format. Now that we've got that out of the way, this video is all about what do you do in moments like this? I mean, look at this chart. If we get off of a log chart and just look at the nominal chart, where each price here on the price scale is just a dollar for dollar increment, keep in mind, logarithmic effectively changes it to a percent move. So, the percentage change from 1 to 2 is 100%. The percentage change from 98,000 to 99,000 is much, much, much less than that, 1% or so. So that's what a log chart does. But let's go back to the nominal chart just to highlight the swings as well, because I think this is sort of the cornerstone of me making this video. So you missed Bitcoin. You see it breaking out. You see it on X. Maybe you've seen some news feeds. Perhaps it's on financial media. And well, that's how you know the drumbeat has started. When you hear the drum beat, oftentimes that means you've already missed it, because once you really start to understand news cycles and markets, what you realize is that when the news starts covering a movement, a price action, when you start to see more social posts about a movement, a price action, that means it's already happened. People are now covering it. So it's begun. The whole point of investing and getting sort of outsized gains is finding these things or holding on to these things before that drum starts to happen. So if you are seeing posts, you're feeling the fear of missing out. This is the current candle here on a monthly basis. It's quite the breakout. Well, I'd just like to say you've missed the move. It's just that simple. But there's nothing wrong with missing the move. I have no doubt that Bitcoin could continue higher. I also think the technology is freaking remarkable. I mean, if you read about its history and what it's done, just in terms of what it's been able to do to create a currency that is almost indestructible, right? Almost first to market. It's like the first to market indestructible digital asset. And it's taken me some time to realize that. I own a little bit of Bitcoin, not much. I've actually held it since about 2012, 2013, but it's not like life-changing money. It's just something I've held. I thought the technology was super interesting. That's why I dove in. Obviously, in hindsight, I wish I bought more, but that's not the point of this video. Hey, we're going to have tons of trades throughout our lives. Sometimes we get some wrong. Sometimes we get some right. The point of this video is really what to do now, and I think this does apply to other asset classes as well. So for me, the most important thing here is that if you look at Bitcoin's history, it has hit all-time highs in several different moments. And at each moment, it has sort of retraced and gone back to a new all-time high. I mean, look at the run up here from 2012 to 2013 at this high. Look at the size of this candle here. And after that, it's sort of melted down for some time. The point I'm trying to make here is nothing goes up in a straight line. Apple never went up in a straight line. Any great company you can think of, any stock you can think of has never gone up in a straight line. There are always drawdowns. So with that in mind, why are you going to chase something up here? If you're looking to trade it, that's a different story. Maybe there's a quick trade you can make. We could zoom more into this sort of 5-minute chart to see what the price action's saying. What price level are you watching? But the whole point here is that there's no reason to chase something unless you are going to maybe trade it with very strict rules. So what I mean by that is rather than jumping in and chasing this and like I'm just all in, everyone's talking about it, maybe set up a really defined trade. So what I mean by that is if you really think you need exposure now, why don't you go ahead and contain yourself, back away from the FOMO, and say, I think I might buy here at 92,000. So let's say this is your buy level. And I'm going to have a stop loss where if it breaks these lows again, maybe you have 90, if it breaks 90,000, you're out. So this would be your stop loss, this line, which means if it goes below that level, you're selling, you're out. And maybe you have a take profit target at a big round number like 100,000. So I'm just going to do this 100,000 line. So now what you've done is you've just created a trade, very simple. You've now got exposure. You're not risking a lot. You know how much you're going to lose. You know how much you're going to make. And now you're in. And actually, a great friend once told me, who I followed in markets, he said, Steph, if you ever feel like you need to chase something, don't just impulsively buy it or trade it. Buy one share or buy one aspect of it. Now, this is Bitcoin, so it's 92,000. So if you buy one Bitcoin, it's $92,000. But you can buy pieces of a Bitcoin. So you don't have to buy a full one. You could get some slight exposure to Bitcoin through ETFs or through another instrument or through getting pieces of a Bitcoin. The whole point here is that you don't necessarily have to just go all in and buy one Bitcoin or all of your Bitcoins. Just get a little exposure, get a taste of it, see what's going on. The market might turn quickly and you might say, thank goodness I did not, load the boat, or the market could go up to 100,000, hit your trade, you made a nice profit. But there's really no reason to chase here, because the cornerstone, at least the way I've learned markets, is that if you're reading about it now, if you're watching this video because you're worried about missing out, this is often the times where the move has already been made, right? The news, the media, the drumbeat begins after the move's been made. That's what they're covering in the first place. And so that's sort of an insight, I believe, for the new traders out there or people looking to trade this, is that there's no reason to chase, because if you look at its history, there are moments in time where Bitcoin does pull back. So let's actually just go through that. Here's the all-time high it hit in 2021. And let's see how much it dropped from there. So if we go like this, price range, it's all-time high. So it dropped 55% from that all-time high. It hit another all-time high again in 2021. Here's 2021. Now let's see where it dropped from 2021. It dropped 78% from its 2021 highs. 78%. Holy cow. It hit a high of 69,000, which I'm going to get to, by the way. And you can start to see, like, these drops happen. Now here, it definitely wasn't as devastating. Hit an all-time high here, and it ultimately dropped to a low of 32%, but still you had a 30, if you didn't buy this exact all-time high, there was an eventual 32% drawdown that happened. But this idea of having to buy something because it's just going to suddenly go straight up to the moon forever, doesn't matter doesn't matter what you think. All throughout history, it's never happened. Something's always come down to earth. Always. It could continue going up, but there's generally some sort of a correction along the way. Now, I want to talk about the big round numbers, 69,000. I mean, I laugh at that was this all-time high. Let's see, what was it? Literally, the top tick on Wednesday, the 10th, November 2021, when it made a new all-time high, was 69,000 right there. That's interesting. The top tick on this number right here looks like it was almost 65,000, 64,895. Now, why am I telling you about these numbers? Well, it's interesting that in markets, oftentimes these big round numbers mark turning points, because what happens is there are investors out there and traders out there who say things like, I'm going to invest when it hits 100. They're not going to say I'm going to sell when it hits 100. They're not going to say I'm going to sell when it hits $95,564. Like, unless they're really doing some critical marking and they've got some sort of measured move on there, and they've got a reason for that with an indicator. But for the most part, these round numbers really govern markets. My favorite example is actually the S&P 500. So if you look at the S&P 500, well, Bitcoin, by the way, hitting 69,000 and then topping out is a pretty hilarious example as well. But the point here is that if you look at the S&P 500, what you see here that I just brought you back to is the great financial crisis of 2009. And this low here is rather fascinating, because if you go through this low to really see what happened on the intraday chart, you'll see, and from my understanding, it's just how it worked out, the low that actually was hit that marked the bottom was 666. So the financial crisis, when it ended, the absolute low, you can see that if you look up there, you're going to see this low here. Let's see if I can mark it again. Was 666, which, as we all know, is sort of this, demon-like number for, I think Satan. But it's just remarkable. 666 marked the exact low. Bitcoin, previous high, 69,000, marked the exact high. Remember, these are people like you and I trading. Some of them find it humorous. Some of them find it fun. Some of them find it ironic. These big round numbers tend to really play an important role in these processes. So I'm making this video for all the Bitcoin investors and traders out there and people, looking to chase it or buy it up here. I think that Bitcoin, like I said, is a remarkable technology. I own some. This is just my opinion for education. I am not necessarily loading the boat up here. Let me just put it that way. And if I wasn't loading the boat here, then I don't really know why I'm going to load the boat here. And the whole point is that if I wasn't loading the boat here, I missed it. If I wasn't loading the boat down here, I missed it. But maybe now it's caught your attention and you want to sit back and wait. So, what you can also do is you can create alerts, you can create a process, reminders, and you can get alerted when that number comes back down to a level you like. And then when it comes back down to that level, you make your move. I do think also what's interesting is that if you are sort of a trader investor who looks for breakouts and fakeouts, you really do have an interesting zone here, I must say. So this zone you can see was pretty significant for just sideways action. It was a top selling action, selling action. There's some support here, resistance, support here, resistance, until it just broke out. But the reason why I'm pointing this out is oftentimes in these assets that trade, quite frankly, on technicals quite a bit, there's a very real possibility that this might be your support. It might come back down to the 71,000 marker and test it at some point in the future. I don't know. This is just my opinion. And I'm making this video for those who feel like they have to rush in and start buying it. I don't know if that's necessarily the greatest idea ever, but I will say this educational video that I am making is specifically for sort of the thought process. So I look forward to seeing what happens next. I don't know. I could be terribly wrong, by the way, like terribly wrong. I've been very wrong at trading for quite some time. And I'm not afraid to admit that. I think that's an important step if you're trading because you just might get crushed sometimes. But the point here is that I'm waiting. I am definitely waiting